Hello, I'm Andy Bridge from A Place in the Sun Limited, and welcome to this webinar on moving to or living in Spain. It's part of a series covering several countries sponsored by global wealth management company Blevins Franks. And if you're not sure what a global wealth management company does or why you might need their expertise, then that should become apparent as we navigate the financial considerations when leaving the UK and setting up a new life in Spain. So it's good to see the strong interest in today's webinar. I can see the numbers of you piling in now. Wonderful to have you along. Brexit has created a few extra hurdles, but living in Spain remains a long-held ambition for so many of you. Let me kick off by welcoming three individuals who do live and work in Spain, joining us today to share their knowledge. And first up is Brett Hanson of Blevins Franks. Hello, Brett, welcome.
Hi, how you doing?
Tell us a little bit about your business, your role, what you do, where you are, if you can just share that with our audience.
Sure. So I'm a senior partner at Blevins Franks, and Blevins Franks have been advising UK nationals who are planning to move to Europe. We have local advisors which are fully regulated in each of the jurisdictions that we work in. That's Spain, France, Portugal, Cyprus, and Malta. And I've been providing tax and investment advice to UK nationals living in Spain for over 21 years now.
Great, thank you, Brett. And where are you based?
I'm based in Javier, halfway between Alicante and Valencia on the Costa Blanca.
Fantastic. Next up is Melanie Radford of Legal Services in Spain. Hi, Melanie.
Hi, Andy. I'm a partner at Legal Services in Spain. We specialise in Spanish residency and visas, and it's not just for UK nationals, it's for all nationalities. So it could be Europeans, it could be Americans, or UK nationals. So we actually assist clients with the Spanish residency and any type of visa. Fantastic,
thank you, Melanie. And next up, a regular contributor of ours. He is to our webinars what Deborah Meaden is to Dragon's Den. It's Alex Radford.
Hey, good afternoon, Andy. How are you?
I'm very well. Deborah Meaden's my favourite, by the way.
Oh, thank you for that. I'm your favourite lawyer. That sounds really good. So
my name is
Alex Radford. I'm an English solicitor and Spanish lawyer. My parents moved out to Spain in 1981. And that was first of all to the Costa del Sol. So I grew up in Spain. I speak fluent Spanish. Moved back to the UK in '92 to go to university, and returned to Spain in 2003 as a qualified English solicitor. I qualified as a Spanish lawyer here, and have been active for British clients and international clients, really buying, selling, and inheriting property in Spain and doing a business across Spain. And I'm based at the moment in our Ciudad Quesada office in Alicante, and we've got the other regional office down in Marbella. And basically we act for clients all over Spain.
Great. Well, thank you all. Good to have you all along. And for our audience, you can see we have a breadth of knowledge. We hope that will cover all your questions today. And we do invite your questions. If you look at your screen and if it's not popped up, hover over your mouse towards the bottom of the screen and you should see something that says Q&A. Click on that and you can put a question in there for us. A couple of you have already done so, but do feel free to jump in there and add your questions. We will try and cover them off later on in today's webinar. So we are focusing on people making a permanent move or people living in Spain already. But we do want to cover off very briefly this issue of what's changed post-Brexit in terms of how long you can spend in Spain before you have to start thinking about visa and tax considerations. Alex, just cover that off for us, would you, from the point of view of a holiday homeowner who's happy to go there every, several weeks a year and then come back to the UK and be based in Spain. Just cover that subject for us.
Yeah, so basically, the key issue to bear in mind is if anyone wants to spend more than 90 days in Spain, then they have to apply for a visa, okay? Or if they're intending to live in Spain. That's basically the general. More than 90 days, and you apply for a visa or a residency. And if you just want to use the property in Spain as a holiday home, then you can spend 90 days in a 180-day period. So, and that 180 days starts as soon as you finish the last day. So for example, you fly into Spain on a Monday, and each night is counted. Each night is considered one of those days. So it's a rolling 180-day period. And Spain, Andy, we've got the tax year runs from January to December. So if you spend more than 183 nights in Spain, you become a Spanish tax resident. Okay, so lots of people might want to do that. They may not. And if they don't want to become a tax resident, they have to spend less than 183 days. But anyone wanting to move to Spain, live to Spain, they have to apply for residency.
So for a lot of people who are still buying holiday homes, the 90 out of 180 days suffices. They can come for 2-3 weeks at a time, go back, and maybe it affects retired people who are looking to spend all the winter, maybe 4 months, but generally it's a relatively generous allocation. You can have 3 months out of every 6 there, have your holiday home, remain tax resident in the UK, and that's that.
Generally speaking, Andy, that's true. However, what's important for listeners to bear in mind is that when they come into Spain, their passport is stamped. And I certainly recommend that they do get their passport stamped, because the tax authorities will be looking at the amount of days that they spend in Spain. But what you find is that, a lot of people, would come over to Spain for the winter, say from October to March. And that period, of course, is more than the 90 days. So those people wishing to spend more than 90 days, more than 3 months, would have to apply for a visa. So they want to spend more than 90 days. So yeah, so really, it's each individual circumstances. But what we are seeing, and Melanie and her team are really busy in that respect, is that people do want to spend more than 90 days here. So they're applying for the different types of visa. Okay,
great. So Brett, this is the crux of today's webinar. You're not that more casual holiday homeowner looking to sit within that 90 out of 180-day entitlement. You're wanting to spend longer there. Alex touched on the tipping point there in terms of number of days. Can we explore that with you as to what that all means? I know that's quite a big question, but let's kick off with the tax position.
Sure. So as Alex was saying, the tax year in Spain runs from the 1st of January to the 31st of December. And if you spend more than 183 days in Spain in that tax year, then you are as a tax resident of Spain. And what that will mean is that you're liable to tax on your worldwide assets in Spain. So regardless of where those assets are, regardless of where the income is coming from, though there are a few exceptions, that those assets and income will be liable to tax. And in Spain, you've got income tax, capital gains tax, wealth tax, and Spanish inheritance tax. And you also need to bear in mind the Spanish succession laws. So it's important that you look at this and give this some consideration before making that decision. As Alex was saying, I mean, we're inundated now with British nationals who have tended to spend the winters in Spain, but since Brexit, they've not been able to do that and are now going forward and becoming, getting their residency and becoming tax residents of Spain.
This is quite a big concept to get across to people, isn't it? You cease to be tax resident in one country and you becoming tax resident in another. And that is where you report and pay all your dues.
It is, because also if you've grown up in the UK and you've paid tax in the UK, you kind of, you feel that it's going to be the same wherever you go. So you automatically, a lot of British people think, oh, well, ISAs, they're tax-free in the UK, they're going to be tax-free in Spain. And of course, they're not. Spain say, well, just because they're tax-free in the UK doesn't mean they're tax-free here. Or your main property in the UK. It's your main residence, it's free of capital gains tax, but if you were to sell that as a resident of Spain, then potentially the gains is liable to capital gains tax in Spain. So it's definitely worth looking at kind of all your assets and how they are structured and finding out how they would be taxed if you become or choose to become a tax resident of Spain.
So Andy, can necessarily...
Sorry, Andy, can I just add there that what
Sure.
Brett has just touched on is such an important point for people setting up in the UK and moving to Spain, because they sell their main residence, they might make a gain on that in the UK, And if they moved to Spain and became a tax resident the same year, then potentially Spain could tax them on that gain. So that's why it's so important to speak to someone like Brett to plan the transition over from the UK to Spain to avoid paying that capital gains tax.
Yeah, I mean, the timing of the moves is very important. Another thing to just stress, because sometimes we get, well, I was going to say asked, but actually we get people telling us that there's a taxation treaty in place, and that means they can choose where to pay the tax. And that's not how the double taxation treaty works. That's if you meet the tax rules of each country, where should you pay the tax? But you don't have a choice of where you pay the tax. It's very much on where you are tax resident. And that really comes down to the number of days that you spend in a country. And if you, as I've said, if you spend more than 183 days tax year here, then you are going to be tax resident here and liable to tax in Spain, not in the UK, though there are a couple of exceptions.
So it's interesting, isn't it? Because ultimately, when you're looking at your UK derived assets, for example, you gave us the example of an ISA. That's a product designed for a UK tax regime. And what you're saying is, when you transfer that benefit to Spain, then it's viewed differently. So we're not necessarily looking at a more punitive regime, are we? It's just that there are different rules about your income because you're now judged over there rather than back over there.
Yeah, I mean, in fact, I was just talking to someone earlier today. When you look on paper what the tax rates are and the various taxes that there are, you can think, wow, you actually think, wow, it's pretty good in the UK. Actually, we spend all our time when we're in the UK thinking the tax regime is bad here, and then you compare it to Spain and you don't necessarily feel that way. But there are structures and ways to minimize tax. And certainly for many of our clients, they actually pay less tax in Spain than what they would do in the UK. But that depends on how you've got your assets and how they're structured.
Okay, a question in I can deal with easily now is this being recorded? And the answer is yes, and we will be pinging this recording out to you tomorrow. I can't imagine you've got anything better to do and dash off than stay here for the next half hour or so. But if you do, it is going to be recorded, and we have your email address, and we will send that over to you. There's also a few questions coming in about the actual conveyancing process, timelines to completion. We're not really dealing with that today. Again, that's quite a big subject, but Alex is a man to contact for that sort of stuff. And yeah, so we're talking about this period, specifically with capital gains that you've referred to then, Brett. When you said you may be liable, what's the grey area around that? I mean, obviously in the UK on your domestic, your principal property, you don't pay tax on the capital gain. On the house you live in, you do if you have a second or third home. But why is it a maybe if you were to sell it whilst you were a tax resident of Spain?
Yeah, only in the sense that if there's a gain. If there is a gain, it will be liable to capital gains tax. But if you sell the main residence and there is a gain, and you are a tax resident for Spain that year, then the gain will be liable to capital gains tax in Spain. When I said that on the sale of the property, potentially there's capital gains tax, of course, it may be that there isn't a gain on the property. I mean, I've come across people that have wanted to retain a property in the UK. In fact, my parents did. My parents have been living in Spain for 15 years. And when they came out, they felt kind of, I don't know if it was the fact that they're coming over to see me, but they decided to keep it. And what they did is that they sold the property as a UK tax resident and then bought another property, so therefore restarting the capital gain, so that they'd owned the property for 20, 30 years. They sold the property, bought a new property, which therefore starts the clock again when it comes to capital gain. And then when they came to Spain, they did actually in the end sell that property, but they'd sold it within a year or two of moving to Spain. And so there wasn't much of a gain there.
Oh, I see, that's smart. So the initial property with the large capital gain, they sold as a UK tax citizen to take advantage of the no tax on a primary residence, and then bought another one and started the clock. Okay, I get that. There's a question in as well about, I mean, it's different to CGT, but it's relating to property. What if you were to retain a UK property for rental purposes? Is that just part of your global wealth and gets taxed in Spain, or how's that treated?
Yeah, it's a good question, because you may recall I said that as a resident of Spain, you're liable to tax on your worldwide assets in Spain, and it wouldn't be necessarily in the UK, but there are a few exceptions. And when you have a rental income from a property in the UK, that is still liable to income tax in the UK, but you would have your UK allowance. You would need to declare that income in Spain too, though any tax that's been paid in the UK would be kind of deducted from that. So if you imagine you've got to pay us this much in the UK and it turns out you've got to pay this much in Spain, they'll ask for the difference. If there's a shortfall, I'm afraid you don't get any money back. And also you need to bear in mind that that asset, again, if you sell that asset, it'll be liable to capital gains tax in Spain. If it's not your main residence and you sell that property, there was a rule brought in the UK, I think in 2015, whereby if you sell that property, the gain since April 2015 would be liable to tax in the UK. I mean, it's quite complex, so I would suggest that individual speaks to someone about this.
Okay. And to answer Stana Allison's question, hi there, if we're to sell our home in the UK for circa 340k and then buy in Spain, would we have to pay capital gains? Well, we've covered that. If you're a UK citizen, UK tax resident, I should say, and you sell it, no, then you move to Spain and you're fine. That's
yeah. Though the timing of moving to Spain is quite important. So if, for example, they sold that property in January, February, they moved to Spain in March, they spend more than 183 days in Spain in that year, even though they've sold that property whilst in the UK, haven't moved to Spain. In that situation, there'd be capital gains tax on that property in Spain. So the timing of sale, so it's not a case of just selling the property in the UK and then moving to Spain. You've got to make sure that you get the timing right and the number of days right to avoid that taxation.
Okay, so yeah, the timing's everything, as it is in most things. So that's good. So Melanie, we've been discussing becoming tax resident, which is a byproduct, obviously, of moving there and spending more than 90 days, more than 183 days from a tax position. But what are people coming to you asking for in terms of the types of visas that are available? What's the most commonly sought visa that you're dealing with at the moment?
The most common type of visa is the non-lucrative visa, and that's the visa that, as the name suggests, is that it is non-lucrative. As in you can't be involved in any kind of paid activity or work in Spain. So that visa only authorises you to reside in Spain for 1 year without the need to work. So it's perfect for any retirees, anybody who wants to retire early, or anybody who's retired, or anybody who's not working. When you actually apply for that visa, you have to prove that you aren't working. Okay, so if you're in receipt of a pension, then obviously you're not working. But if you're younger and take an early retirement, then you will, and you've left your employment, and you are going to need to show that you P45 or proof that you have actually left that employment. But that's only at the appointment itself, because in that process we talk about timing of the non-lucrative visa, but to get the approval of the non-lucrative visa, the key to approval is having all the correct documentation. And you really do need to sort of start gathering that documentation. I normally recommend, if you're not using some form of express or premium service, you really need to start preparing that documentation a couple of months before you want to attend the consulate appointment to get your documents in order. And then you attend the appointment. But in terms of timing, if you want to actually time it so that you aren't, which is what Brett was sort of saying, is your timing when your residency starts in Spain, so that you aren't you aren't a tax resident in Spain, say this year, then you do need to look at the timing of that, because what you do is you'd attend the appointment at the consulate, okay, with all your documentation. So the consulate appointment is all about checking the documents, the documents in order, and then you pay the fee. And then the documents then are actually sent off to the Foreigners Office, where here in Spain, for the final approval of that visa. Okay, when the visa comes through, they then, in their passport, they get the non-lucrative visa approval, which will be valid for 3 months. But ideally, the start date of that visa will be the start date of when you want to actually move and travel to Spain. You can choose that. You can choose a date 90 days in advance of your appointment for that visa to start. So you can plan ahead on that one, and you can time it so that there aren't 183 days left in this current tax year. But this is the important thing, when you've got that visa approval in your passport, yes, as Alex said, please, when you go through to Spain, get your passport stamped. And this is key, because the date on that passport is when it's stamped is the day your residency starts in Spain. Okay, so even if your visa was issued today with the start date of today and you went a week later, it would be a week later on the entry stamp when your residency starts. And then you would travel, then you're in Spain and you apply for your residency card, which is known, everybody is known as the TIE card, which is the foreigner's ID card. It doesn't matter that you apply for that foreigner's ID card, say 2 or 3 weeks later, because when you eventually get that TIE card, it will be valid for a year from the date that you entered Spain. So that's really important on your on the timing side of things.
Okay,
and then
so on this not sorry to jump in there, on this non-lucrative visa, then if it's for people not looking to engage in any commercial work, I guess it's targeting retirees.
Yes.
In the main, what are the kind of the headline, what's the headline qualification criteria for people looking to come in on that sort of visa?
Right, so you've got the financial resources side of things. So if it's just a single applicant, then it's just short of the equivalent of 28,000 euros to reside in Spain without the need to work for 1 year. For a married couple, they can actually have a reduced level of resources. So if they're a married couple and they would attend the appointment together, and they can have a reduced financial resources of just less than 35,000 euros equivalent. And that you can show if you've got pension income. Okay, so you can take off the pension income, and you can show any savings as well on that side of things. So you can show your pension income and savings, so a combination. But they do want to see funds in a bank account as well as any savings vehicles.
And is that I'm displaying something I did many years ago when I was applying for a visa to get into Australia, and the minimum requirement was 1,500 quid. I got somebody to lend me 1,500 quid for a day, took a picture of my bank account and then sent it back. Clearly we're not suggesting anything like that, but what is the requirement from the consulate in terms of visibility of that money?
Right, okay, so bank statements are obviously, all 3 consulates request, say one requests 6 months worth of bank statements, another one requests 3 months, and another one requests 12 months. So we've got inconsistency across there, but they want to see the full month's bank statements, full transactions, of which one does need to be a current account. So if you're showing a lump sum that's just appeared in your bank account, then they will ask to see the source of those funds. So you need supporting documentation, because they want to make sure that that's your money to reside on in Spain for a year. But equally, they're looking at those bank statements to make sure that there's no income from salary, because remember, this is a visa where when you apply for it, to qualify for it, you shouldn't be in any paid employment at all, and no intention of when you go to Spain.
And that includes, as you said, yes, that includes paid employment from the UK. But you could presumably, could you receive dividends or rental income or other payments like that?
Yep, dividends, you can receive dividends. They're classed as passive. Sometimes people are receiving dividends from their own company, for example. So, and that's easy for them to check out, because they just have to go on Companies House. to see who the directors are and so forth. So if you can receive dividends, they pass as a passive income, providing you are not partaking in any type of work activity for that company.
Yeah.
And rental income, yes, rental income's there. Rental income's on that side of things, it is the net income. Again, it's a passive income, it is the net income, but you've also got to prove that you're going to need documentation again to show that you're going to have that income. If it's supplementing the financial resources, that you are going to have that income for that whole year while you're residing in Spain. Okay,
great. And Brett, Melanie's brought up pensions there as one of these potential revenue streams to support your application. We have got several questions coming in, some fairly specific, but just cover off for us what happens with your pension when you move to Spain. You've maybe got, I don't know, a lot of civil servants pensions, private pensions, workplace pensions. Just run us through the headline on that, please.
Yeah, sure. So when you've got pensions, then under what we talked about before, that if you're a tax resident of Spain, they'll be liable to tax in Spain. Again, there is an exception. So civil service pensions, for example, will remain liable to tax in the UK, and you'll have your UK allowance. But the UK state pension or final salary pensions, or if you've got things which are called SIPs, self-invested personal pensions or personal pensions, then any income that you take from those will be liable to tax in Spain. Just one thing to add as well, before you move to Spain, just think about the pension cash lump sum, because normally when you have a pension fund, you can start drawing down on those at age 55. And you can, under the UK rules, take 25% out, which is tax-free. But again, that's a UK rule. If you are a Spanish tax resident, then, and you take that 25% lump sum out, that will be taxable in Spain. So that's, again, something that you might plan for before the move to Spain. Just one other thing on pensions. So you can keep them. There's no problem with that. So you've got a pension fund in the UK, you're living in Spain. But just be aware that since Brexit, where we saw the end of the free movement of goods and services, that also includes financial services. So a UK financial advisor, strictly speaking, shouldn't be advising you or your UK pensions if you are living in Europe, or in this situation, Spain.
Okay. So just to, I think that answers the Chris Hodgson's question. Is that the pensions income drawdown, the 25%? Is that the same thing, Brett?
So that would be, so if you have, you can take out the 25%, which would be what's called the pension cash lump sum. And then after that, if you draw down an income, which would be the pension drawdown, then that income, instead of being taxed in the UK and you have your UK allowance, it'll be taxed in Spain, and you have a Spanish allowance, which I'm afraid is less than the UK. It starts at 5,550 euros in Spain.
Okay, and just on the, say for example, somebody receiving a state pension, they would receive that in the UK into a UK bank account net of tax, but then they report that in Spain. How does that all work? How do you level that out?
That's a good question, because again, sometimes we get people say, oh, well, I mean, we come across people that have been living in Spain for years and say, oh, well, I've been, getting my UK pension, it gets paid to a UK bank account. I've been paying tax in it in the UK. Now, what should happen is that it doesn't matter where that money's being paid, it's where you are resident. So if you've got, as you say, a state pension, even though that may be being paid into a UK bank account, what you would need to do is declare that in Spain. So the tax year runs from the 1st of January to the 31st December. You do your income tax return for that year, the following year, around May, June time for the previous year. So if someone moved to Spain and became a resident in this year, 2022, they would declare next May, early June, they will declare the income from the state pension for the year, then, and pay tax on it in Spain.
But having paid tax on it in the UK, because you get your UK pension net of tax, don't you? So how would you then balance that out? How do you claim that back?
Okay, well, in that situation, then you would need to contact HMRC and you'll go through a process, but whereby you will get that pension gross.
You will get that pension gross in the UK and then settle the tax liability in Spain. Yeah, Louise Mitchell-Rayner asked, is it true that as local government pension recipients, we'll be taxed in the UK and not Spain with UK tax allowances rather than Spanish ones? So I think that's the point you covered off first. That is correct. That's correct. So that's an exception.
Yeah, so that's the exception. Just one thing to bear in mind, and I'm going to use my parents again. My father worked in the prison service. Well, that's what I was told.
He was on the right side of the bars, yeah?
Yeah, exactly. So he would have the civil service pension, which was taxed in the UK. When he got his state pension, that was taxable in Spain. So he gained in the sense that he had a UK allowance on the UK, on the civil service pension. He had an allowance in Spain, an additional allowance, so to speak, because of the state pension. But what Spain did a few years ago was that they said, right, okay, well, look, we'll only tax you on the state pension, but we will take into account your civil service pension. So it kind of pushed him up the bracket. So he didn't pay the tax twice, but he found that his state pension was being taxed in Spain at possibly a slightly higher tax rate.
Okay, I see that, yeah. Jumping back to visas, Melanie, we've got quite a number of people who are couples where one person is a UK passport holder and one person is an EU passport holder. Right. Susan Rafferty here lives in the UK. Well, she has an Irish passport. What's her situation, or the situation for a couple where one is a UK passport holder and one is, say, German or Irish or Dutch?
That's great. You don't need a visa. Okay. Basically, the one with the European passport, the Irish, the German, what they would do is they would apply for Spanish residency as an EU citizen, and that's done at one of the local police stations here in Spain, where they reside. So they would get, it's often been referred to as the green card because it's a green residency card. So they would get the EU citizens' rights. And then if they are married, then the spouse can then apply as a family member of an EU citizen. So we actually present those particular residency applications online for approval by the Foreigners Office. And once it's approved, I mean, they take up to 3 months. Certain provinces take quicker than that. Some come back in 3 weeks. And once it's approved, they then apply for the TIE card, which I mentioned earlier, which is the foreigner's ID card. But this time the foreigner's ID card will actually show that they have EU citizens' right to work and reside in Spain.
So ultimately, quicker and more straightforward to get to residency status. I guess it's important to say at this point, or maybe you can explain more fully, more expertly, that ultimately the non-lucrative visa and other visa types are kind of steps to move towards ultimately residency. So I think I'm right in saying the NLV is for a year and then you renew it for 2 and then another 2. Just give us a brief outline of that. So
what you do is, so bearing in mind, if we track back and we say, well, actually residency starts when your passport is stamped, and you might, when you enter Spain. Now you might not get that residency permit until, say, 2 months later, because you don't get, when you apply for that residency permit on the non-lucrative visa, it takes a month to actually then go back and collect it. Okay, so it's not given to you on the day. And then by the time you get it, you're already a few months in, and you can actually renew that non-lucrative visa 60 days before it expires. Okay, and it's important to do that because if you let it expire and then try and renew, they might impose a fine on you. So we actually present the renewal applications online, and once again for approval by the Foreigners Office in the provinces, in the county where you actually reside.
Okay, thank you. Just scrolling through, lots of questions coming in. Thank you. Kathy Moore, my husband and I live in UK but have Irish passports. I think we said, lucky you. That's all rather straightforward. On the non-lucrative visa then, Brett, a lot of people, non-working age, retirement age, they're thinking about their wills, their legacy, their planning of inheritance and that sort of stuff. What sort of advice do you give there? How do you work with people on that basis?
Yeah, okay. So then you're looking at estate planning, and so if you've got someone who has applied for the non-lucrative visa and have become a tax resident of Spain, you've got to bear in mind that not only have you still got the situation with UK inheritance tax, but you've also got something in Spain called Spanish succession tax, and you've also got Spanish succession laws. Where do I start? Succession laws.
Do the inheritance planning bit if you would, and then I'll go to Alex for the wills.
Okay, right. So when it comes to inheritance in Spain, Spanish succession tax is applicable in two situations. One is the asset is in Spain. So if you've got, for example, a married couple living in Spain, they bought a Spanish property, they've got some assets, say, outside of the UK, and on first step, they leave those assets, say, to the children. Bear with me on this, I know that's not normally what happens, but if they did that, then the only asset liable to Spanish inheritance tax will be the assets physically in Spain, because the children, are in the UK, so the liability is only on the Spanish assets. I think where we have a kind of a bigger issue is when you leave your assets to each other as residents of Spain, because we're familiar in the UK that there is no inheritance tax between married couples, but in Spain that there is, under state rules, there is a liability. So if you've got a married couple with assets in Spain and in the UK, and on the death of one of you, you leave those assets to each other, then there is Spanish, or there could be Spanish inheritance tax. Now you've got the state rules, but you've also got the local regional rules, the autonomous rules, and there's, I think it's 17 regions in Spain, and each region have their own rules. You need to be aware of that, again, because there are things that you can do to help minimize that tax, and there are certain allowances, but you need to be aware of that. Be surprised how many people come to live in Spain and only then find out that on the death of one of them, that there is a Spanish inheritance tax. That tax starts at around 7.65%. It can go up to 34%, but they look at also the relationship. So if you've got an unmarried couple, I think we've actually done one of these before, and someone proposed one of these calls. No pressure to the audience out there.
That's right.
Get married for the tax benefit.
In that situation, an unmarried couple, it can be multiplied by 2, the tax, and the allowances are not so good. So you've got to look at this inheritance tax and also look at the relationship between the person who is dying and the person that's receiving the assets, the wealth of the person that's receiving the assets, and what region that they're living in, to actually work out what the potential tax liabilities are. And again, there are things that you can do to minimize it. Now, that's the Spanish inheritance tax. Bear in mind, there's still the potential of UK inheritance tax, because you keep your UK domicile status for a number of years. That's something that needs to be looked at once you've been resident for a number of years. And then you've got Spanish succession laws, which does relate to the wills, are happily handed over to tax.
And this is exactly the sort of area, when you say, you need to speak to some, this is exactly the sort of stuff that you do, that you help people with, Brett.
Absolutely. I mean, myself, Alex, Melanie, this is how we help people.
Well, I think Melanie's already got a friend to message in. Gareth Davis clearly must be a friend of yours, and said, is it better to use a professional company to assist in getting a non-lucrative visa, or do it yourself? Melanie, an open goal.
Oh, wow. If I could tell you that what the success rate is at the consulates of some of these approvals, and I could tell you that it was probably around 33%. So if I can tell you our success rate is 100%, then I'll leave the decision in your hands. But if you know all the documents, what's required, all the wording on the documents, and you know all of that, then then good, have a go.
Yeah, Gareth says the certified translations into Spanish are giving him concern and just lining up the paperwork and the timing of it. So
Yeah.
that's where you come in, and that's the sort of service that you offer. Great. Alex, back to death and taxes. Wills.
Yeah, well, Brett, I think you did really good job of explaining that, because it is a complicated area, and it really all starts with the property purchase. So when we talk to people about if they're moving to Spain or just buying a holiday home, we talk about property ownership options. And a buying process typically takes anywhere between 4 weeks and 12 weeks, and you do tend to buy it's freehold that someone would buy in Spain. So if you're buying it as a holiday home, I think it's and you're not intending to move to Spain, you've got children over the age of 18, there's a great opportunity to mitigate Spanish inheritance tax, but also UK inheritance tax, because in effect, if you of course trust your children and they've got their own property in the UK, so they've got their own main residential home, you buy the family property in Spain, and that property you could actually put in the name of the children's, and mum and dad can retain a life interest in that property. So in effect, when someone dies, when the mum and dad, one of those dies, their life interest extinguishes, but the surviving spouse still has the right to stay in that property for life. So therefore, there's no Spanish inheritance tax, and the beauty of that scheme is that, in effect, if the parents live for more than 7 years, it's known as a potentially exempt transfer in the UK, and that would reduce the UK liability on inheritance tax as well. So that's really, I'd say, focused on people who are buying a holiday home, but obviously you've got to be aware of death, debt, and divorce. So those sorts of things to bear in mind. But when someone's actually moving to Spain, Andy, we talk to them about basically property ownership options. I would always recommend, if you're moving to Spain, buy it in your own name, and then obviously, of course, put in place a Spanish will. And a Spanish will is signed before a notary. And a property purchase is signed before a notary as well. So we by and large try and time the wills to be signed at the same time as completion or thereafter, because a lot of people give us power of attorney. They give us power of attorney, which is a document that authorizes us to act for them in Spain with the property purchase. They give that to us early on in the process, so we can open a bank account for them and apply for their NIEs. And then, if we're using that power of attorney, we'll complete the property purchase, and then they'll come at a later date to sign the will. And the Spanish will, I'd always recommend having an English will for your English assets and a Spanish will for your Spanish assets, and they work together. And if you update your English will, it's important to put in that will, because normally the first clause of an English will states, I revoke all former wills. And if you have a Spanish will, it could revoke the Spanish one. So if you don't want to revoke the Spanish one, let your English solicitor know, and you amend that clause as, I revoke all former wills except my Spanish will dated X. So you have both wills working together. And the Spanish will system, Andy, is brilliant, because you sign it before the notary holds on to the kind of signed ink version and gives you an authorized copy. So when someone dies, they go along to the civil registry with a death certificate, family member, etc., beneficiary, and they'll be given what's known as a certificate of last wishes, and that will confirm where that last will was signed. So, in the UK, someone dies, everyone's kind of saying, where's the will? Is it, what solicitors is it at? Where's Auntie Bunty's will? Is it?
Got to opt for that prior to dying. So in that Spanish will, you actually also state that you would like the law of your home country, the UK law, to apply, which means then you can leave your assets to who you want. Doesn't avoid the Spanish inheritance tax. Spain will then say, right, well, you've got to pay the tax. But it's quite important, as opposed to if you've got assets in Spain and you don't have that will, that's going to then lead to a potential issue.
Great.
Yeah, it's a really good point, Brett. And again, Andy, coming back to, if you're buying a holiday home as opposed to moving to Spain, you can talk about putting the property in the names of the children, or if you're not happy with that, mum and dad can buy it in their own names, and they put in place a Spanish will. And for example, up here in the Costa Blanca, which is one of the 17 autonomous regions, it's the Valencian autonomous region. There's each direct heir, so a blood relative, parents, children have an allowance of 100,000 euros each, and then 50% again discount on the tax. So if you buy a property for 300,000 and you've got 3 kids, you can put in place a Spanish will. You could leave a life interest to each spouse, and then you could leave the legal title down to the children. So there's lots of options to talk about, and we've got plenty of time to do that during the conveyancing process. Okay,
great. I'm reminded by Joanne Deering, we didn't quite cover off, my fault, Melanie, the NLV in its full status. So Joanne's question is, can you tell me the financial requirements for moving through to, as she says, permanent residency? Does it multiply by 5 when you get to the permanent residency space timeline? We've put aside 70,000 euros to cover the visas for the first 5 years, and we're not sure if that is an appropriate amount. Can you just outline what's involved in that, Melanie? I know it's complicated.
No, yeah. I mean, I'll touch on permanent residency as well. What do we mean by permanent residency? Okay, so you've really got an initial, or you can call it temporary residency if you like. So you've got your residency for 1 year, then you renew it for 2 years. Okay, so you are going to need to show the proof of financial resources for both of those years. If you've got a pension coming in, then you're going to have that pension for both of those years. So it's just going to be, if it doesn't, so it's going to be double the financial resources, because you're going to need to show it for both years. Then you renew again for another 2 years, and then so now that's the 5th year. So then you can apply for permanent residency, where you do not need to show financial resources. You've proved.
Okay, so then you're kind of in the clear in terms of,
you can work and you can reside in Spain as well. But first of all, you've got to do you've got your 1 year, which is your first year. Then you've got to renew for 2 years, then another 2 years. So you're almost on your sort of your sixth year here, where then you apply for permanent residency. So even a European citizen, when they're applying for residency, their first residency is only temporary for 5 years. It's after the 5 years that then they apply for the permanent residency.
Yeah, I think that's a good point. We actually haven't mentioned it, Brett, but in terms of the tax status, becoming tax resident over 180 odd days or whatever it is, that was ever the case pre-Brexit, wasn't it? If you were moving to Spain for that period, you always had to sort out your tax affairs. This is not a Brexit impact, is it?
No, absolutely. I mean, before Brexit, you'd have British expatriates, albeit okay. So you had, as I think we said at the beginning, that you had British nationals that would come over, say, 4 or 5 months of the winter, thereby doing less than 183 days. But British expatriates have been moving to the likes of Spain for decades, and they've decided to make a lifestyle change, and they come to Spain. They spend more than 183 days here. Okay, they didn't go through visas when within the EU, but they then applied for the residency, became tax residents, and paid tax on their worldwide assets in Spain. So there's nothing new there.
Yeah. You guys are the experts rather than me, but I'm going to answer Bob Gill's question. Can you use the last 90 days of one period and the first 90 days of the next? Now, there isn't a fixed period, is there? It's 90 in 180 days. So the short answer to that is no.
Yeah, absolutely. It's on a rolling basis.
It's a rolling basis, Bob. Yep, sorry. They've spotted that one. You can't get away with that one. And Brett, Haley Buckley asks about, is there any difference in Spain in recognition of male heirs versus female heirs?
I've never been asked that, and I can see Alex shaking his head, and there's no difference whatsoever.
You would like to think not.
Basically, Spanish law comes from the Napoleonic codes, and there is equal treatment between women and men. and it's not Sharia law, so to speak. So Sharia law, everything goes down to the male heir. Here, you can leave it to whoever you want. There's no difference between male and female.
Okay. Andrew Mace is asking, we intend to make a permanent move to Spain, are looking to buy a property now. How assured will we be of getting visa status when we want to go through that process? Do you get a lot of people like that, Melanie, who kind of want to know where they're going to end up before they take the plunge on the property?
Yeah, normally they want to, they're concerned about visa approval, but once again, what I say to them is that you have the right to apply for that non-lucrative visa, providing you've got the document. The key to approval is the correct documentation. So you present basically you need to present the documentation on the plate so that they can understand it. So you have the correct documentation. There should not be any reason why your visa application would fail, other than the obvious. If they ask you, are you working, and you say yes, and you say, well, on this visa you can't work on this non-lucrative visa. So there shouldn't be a reason why they would wait until visa approval to purchase, say, for example, a property. And like we've already discussed, even if they haven't, if they're still waiting for their visa approval, they've still got 90 days in a 180-day period, rolling period, as we said, that they can use to come out to Spain. So even if and every new day is a new 180-day period. So basically, they can still spend 6 months, albeit not consistent 6 months, a year in Spain. So they can still come out here, even if they haven't, even if they're still waiting for their visa approval.
Yeah, and that point is, it's not a subjective interpretation by the consulate. If you've got all your paperwork, you've got the right amount of money, you meet the criteria, then you qualify.
Yeah, but people call it an interview, and I say it's not actually an interview, it's a document checking exercise, okay? You put it in the right order, how they want to, all the documents, every single document in the right order, how they want to receive it, how they check it. So you get it in the right order, you get it correct, and it makes it easier for them to check. They check it, send you downstairs to pay, and then it goes off down the line to the foreigners office in the province to put the stamp of approval on it, and then you go back to the consulate to pick up your visa.
Martin Lee is asking about another type of visa, a digital nomad visa, which we think is much discussed, but yet really to appear. Is that the case, Melanie?
Yes, I mean, this is expected, it's still awaiting approval from the Spanish Parliament. And it's expected, it was expected to be approved midsummer this year. Until it is approved, we won't know what the requirements are, other than it will allow you to work digitally remotely in Spain for a company based in another country. Sorry.
Another country, great.
Yeah.
A few questions on CGT. This is an interesting one. I don't know if we know the answer. Is CGT taxation point in Spain based on the date of exchange or completion? Presumably completion.
Yeah, I believe.
Do you know that one?
Yep. Date of completion. Yeah.
Date of completion. David Williams just needs a bit more clarification. So if I sell my house in the UK and use the proceeds to buy a Spanish property, will I be caught for capital gains?
Again, that's all to do with making sure that when you sell the property, that you're not going to be regarded as a tax resident. So selling the property and using the proceeds to buy a property in Spain, in theory, doesn't cause an issue. But of course, if he sold the property in February, moves to Spain in March, that would be an issue. What would be better in that situation was if you sold the property early in the year, you don't move to Spain until the second half of the year, as an example. Or if you sold the property in the summer, you can move to Spain then, because provided you haven't done 183 days, you'll be tax resident the following year in Spain.
Okay, and Andy, it's worth mentioning, I'd say, also the golden visa, because Melanie's talked about the non-lucrative visa. The golden visa was introduced way back in 2013, when most of the landlords in Spain were banks. after that horrible recession. So in effect, the government introduced a scheme whereby anyone buying a property in their own name over the value of €500,000 could apply for a golden visa, and that would they still have to comply with the similar requirements as the non-lucrative visa. But the key difference, Andy, is that with a golden visa, they could work in Spain, and for renewals, they only had to be here for 1 day. So we're acting for a lot of people who are buying properties over the value of 500,000 in the names of one of them only, and then applying for their golden visa, and then the family can benefit from that as dependents.
Great, thank you. Yeah, quite a few questions about this remote working and digital nomad visa, which is yet to be approved. So I'm going to skip those because there are no firm answers as yet.
Sorry, the only other thing that they can do on the non-lucrative visa, upon renewal of it, remember it's 60 days before renewal, if they want to do a modification to work, they can put in a modification upon renewal, only upon renewal. Okay, so that's 60 days before renewal. So they can use the non-lucrative visa as a stepping stone to then do a modification upon renewal for a work visa, for example.
Okay, but this wider issue of working in Spain for a UK company and an American company, working as a freelancer, where you pay your tax, all of that is kind of still up in the air. Is that that was Lee Crawshaw's question, so sorry we can't do much more on that. Brenda Pomeroy looking for some clarification. Are you saying that if you have residency in Spain for 183 days, but then resident in the UK for the rest, all the assets are taxed in Spain and not the UK? That is what we're saying, isn't it, Brent?
Yeah, I mean, if you meet the tax residency rules in both countries, that's where a double taxation treaty comes into play. And there's like what called tiebreaker rules in there. I mean, ordinarily, if you're spending more than 6 months in Spain and you're spending less than that in the UK, you're going to be tax resident in Spain and liable to tax on your worldwide assets in Spain.
Okay, and yeah, I think it's important we make the point. We're talking about all the kind of the detailed stuff here, which is what you need to know. It shouldn't put people off, but the minute you start talking about taxes and wills and death, and it does sound very somber. You can still go there. It's quite straightforward. There's just a process.
If you know the kind of the hurdles, then you work around those. I mean, look, British, as I said before, British expatriates or UK nationals in relation to what we're dealing with, they've been moving to Spain for years and continue to do so. And everyone that's probably watching this has an intention to move to Spain. And we're seeing people literally on a daily basis that are in the process of moving to Spain or have, and certainly since Brexit. So, I mean, I know that Alex and Melanie have been dealing with people who have got their non-lucrative visa and they've moved to Spain. And enjoying their life here, but it's just making the people aware of the things that they need to look at, ideally before they move to Spain, so that it's as easy as possible, the whole process.
Yeah, naturally people have considered. Heather Balshaw's asked, so what happens if I take a cash lump sum that's already been taxed in the UK over to Spain? Will it be taxed again? Well, that's not the case, is it? You've paid your tax, you've got your cash.
Provided they weren't and will not be resident in that year that they've taken that cash free lump sum, then no, that's it. They literally go into Spain, they've got a sum of money in the bank account, obviously any interest that earns, well, if you're lucky, that could be liable to tax in Spain going forward, just like it would be taxed in the UK. And remember, we're talking about tax and things like that. There are these rules in the UK as well. You do income tax, capital gains tax, UK inheritance tax in the UK. We're just making you aware of the differences in the rules and for you to be able to plan for that.
And typically, when would you look to start speaking to somebody who's planning to relocate? I know you work with people in Spain who are looking to sort out their assets, maybe didn't do so under the previous regime and are now choosing to do so. But, you've got a typical client in the UK, maybe selling up or maybe selling a house and buying a smaller rental and moving to Spain. When do you start interacting with them ideally, Brett?
Yeah, I mean, we get people contacting us 2 to 3 years before moving to Spain. There's nothing worse than someone arriving here and saying, I'd like to take out my pension cash lump sum. And I say to them, well, you're going to be paying tax on that. And they go, oh, we're going to sell our UK property. Are you going to pay tax on this? Or we've set up this tax efficient investment and it turns out it's not tax efficient for Spain. So the sooner that people start talking to us, and of course with Alex and Melanie as well. So, I think when I talk about people thinking of moving to Spain, I can understand where people are kind of sitting there thinking, well, we need to sell our UK home. But do we want to sell our UK home and then we don't get a visa? You know, that's where speak to Melanie, because Melanie, looking at the facts, you're okay. And these are the documents you need to provide. And that will probably hopefully provide you with some comfort to then look at selling the UK property and going through that whole process. So I think the sooner you talk to ourselves in that process, the better.
Yeah, I agree with that, Andy. We have a lot of kind of initial consultations with clients, talking to them about the buying process, moving to Spain, and I think as soon as they've kind of made a decision to do it, it's important that they do engage with professionals, and the tax side and timing is so important.
Yeah, great. Well, timing. We've gone over our time. We've just done an hour. That has actually flown by. I hope our audience has found it interesting. I see the number that has come in has stayed pretty steady. So presumably you've stuck with it for an hour on death and taxes. Congratulations. Thank you for listening to our expert panel, and thank you in particular to Alex, to Melanie, and to Brett. The three businesses will all be represented at A Place in the Sun live next week in London, Friday, Saturday, Sunday, 6th, 7th and 8th of May. I think we posted in the chat earlier on a link to tickets. I know Alex is there in person. I think Melanie is. Brett, I think some of your colleagues are there, not you in person. Brett doesn't exist below the waist. They have to keep him in caveat. I've only ever seen you on webinars, Brett. So, and we do have 10 copies of an interesting tome to give away. It's the Blevins Franks Guide to Living in Spain. We've just posted a link in the chat. Thank you, my colleague Katrina, who's just done that. So there's a link in the chat. Click on that. Go and put in your details. We'll pick out 10 names, and they will get posted off a free copy of the book. Normally £7.50. Maybe they'll do them a bit cheaper for people who don't win. Who knows? But do.
It's a great cure for insomnia.
It's a great cure for insomnia. Okay, yeah, and we will also include that link on the email that will come out tomorrow, which will have a full recording should you wish to revisit the highlights. So thank you all again. Thank you for tuning in. We really appreciate your time and your interest. Please don't be put off. We just want to cover the details so you know what's involved, and you can hear from people expert in their respective areas who can help you do this. We see some lovely comments coming in, thanking us for how interesting it's been. So that's all much appreciated. Thank you all. It's goodbye from me, and it's goodbye from our panel.
Thank you. Bye now.
Thank you. Bye.
Bye-bye.
Bye.